Hello and welcome to my Trading 212 Stocks and Shares ISA portfolio update for the end of the tax year 2024-25. Now, I wasn't going to make this update because I didn't have much time on my hands, and I was going to make it next week and do like a start of the tax year update. But of course, if we've seen what's happened over the past couple of days, today, the day of recording, and yesterday, we've seen big downward movements in the market. But I just thought it'd be sensible to do the update now because I know a lot of people have been in the same boat as me, their portfolio's down a lot, and maybe act as some sort of reassurance to see I'm down as well. I don't know, but anyway, we'll jump straight into it. So here we are in my stocks ISA on Trading 212. On the maximum return chart, you can see I am now at a value of £12,692.47. Now, this tax year, this is a new ISA this tax year, I've deposited £13,500. So that means this tax year, I've lost money on my investments and I would have been better off in a cash ISA. And therefore, a lot of people might be thinking, why bother investing then if you would have been better in a cash ISA? Well, the key thing is, obviously, I didn't know that cash would have outperformed stocks this tax year. When I put money into a stocks and shares ISA, it's money that I don't need for 10, 20, 30 years. So I'm not thinking about the year-to-year performance. You're welcome to do that if you want to. And people look at technical indicators, try and time the market, and with mixed success. But the key factor when trying to time the market is going to be luck at the end of the day. No one can time it perfectly. No one knew the extent of Donald Trump's tariffs before he announced them. There's a lot of people who claim they did know, and people with the benefit of hindsight will claim to be geniuses. They'll have said, why weren't you in cash? And my honest take is leave those people to it. If they want to try and time the market, they think they know best, I say leave them to it because they might be feeling smug now, exiting before the crash, but how are they going to know when to get back in? And this is the key thing I talked about a month ago when the markets were slightly down. Now they're much further down. It's that reinvestment risk. It's okay getting out before a dip and being smug about it. How are you going to know when to reinvest? When the market recovers, it can recover just as quickly as it went down. And it is those recovery days when you have some of the best days in the stock market, +2, +3, +4% days for indexes. Just how we've seen indexes going down by -3, -4% in a day. So you don't often get days when the stock market goes up by +2, +3, +4 for indexes. And if you miss those key rebound days, then you're going to kind of be locked out of the market. You're thinking, oh, I'll just wait for it to go back down again. Then it keeps on going up. And before you know it, you're locked out of the market and you've missed all the way back up. But again, I'm not a financial advisor. I can't tell you what to do. Feel free to do with your portfolio what you want to do. But I do feel that's common wisdom with the whole timing the market rather than timing the market. Anyway, back to my portfolio. You can see, so the rate of return now is -6.5%. And if we go back to, let's see, in January, we can see I had a rate of return of 18.5%. So we've gone from 18.5% money weighted rate of return up to -6.5% money weighted rate of return. So things can change very quickly in the stock market. I'm now at -800, whereas before I was about plus over £2,000. If we switch to the 1 month view, we can see over the past month, down by 11% rate of return. And you can see this past couple of days after Trump's tariff announcement, as he came out with his lovely board. Quite a nice board, by the way. I do like the presentation on that board. Since he's done that, it's down massively. We'll have to see what happens on Monday when the markets reopen, but just over these last couple of days, yeah, we've really seen that downward movement. And then over the past 3 months, -16.1%, nearly -2,500 So yeah, not a good 3 months in the stock market. If we scroll down, we can see the 3 positions I have in the portfolio, the largest being JP Morgan Global Growth and Income. This has taken a massive hit, down by 12% now, £1,400. I think before we were up £1,000, so this has swung massively, down to 493p at the time of recording. If we go back to that 3-month view, we can see end of January, it reached 610p briefly. So massive swing downwards. I still have the same amount of shares, 2013.99, average price 562. Some sort of reassurance, I'm going to get a dividend on the 9th of April, 6p per share. That should be a pretty bumper dividend, £100 plus, I think. Then if we go back, small caps have also taken a big hit. So in general, small caps are very volatile when it comes to anything to do with economic news, interest rate news, tariff news. Then you're going to see big swings like this. So over the past 3 months, very similar, down by 16%. Past month, down by 11%. And then since that tariff announcement, the latest tariff announcement, massive swing downwards like most other things. My average price is $65, current price $57. Then lastly, we have Bloomsbury Publishing. So Bloomsbury actually had a quite nice trading update that, here we are, 15 days ago. Bloomsbury Publishing beats financial year 25 consensus expectations. The consensus market expectation for the publishing company for the year ending February 28 is £333.4 million sterling in revenue and £39.6 million in profit before tax. So they came out with a trading update saying they're ahead of consensus expectations. However, individual stock performance, trading updates don't matter when the wider economic outlook is quite poor, as it is at the moment. So you can see over the past month, we had that bit of a spike upwards after the trading update and then crashing down with all the tariffs. Now, if we scroll down here, this is where we can look at the portfolio going forward. So you can kind of see what I'm planning on doing in the new tax year with these pies. Now, to be clear, this is just my thoughts, what I'm doing. This is not investment advice. I may not even go with this yet. It's just something that I'm thinking of maybe. So you can see I've created 3 pies: active global fund, global index fund, and stock picks. So my idea here is that I might move JGGI into the active global fund pie because it's an actively managed investment trust, global investment trust. And then in the global index fund pie, I'm going to have ACWI, which is a global index fund. And then in stock picks, I'm going to maybe have a few stocks, haven't selected yet, just for my fund portfolio, so to say. And that's going to be a very, very small part of the overall portfolio. So the idea is, by having them each in their own pies, we can then use the individual pie performance to see how they stack up together. So active manager versus passive fund versus my stock picks. And I'm definitely not a stock picking guru. That's why it'll be such a small part of the portfolio. Scrolling down to asset allocation, I'm recording this on Friday. We can see those big swings we've seen on the market today. So minus 3% for a global fund, minus 5.5% for small caps, and then my individual stock down by 5.5% as well, which I'm very surprised why Bloomsbury has been hit so hard, but the market's unpredictable. So I do appreciate that was a very brief look into my portfolio, but I just wanted to get this video out quickly to show that I'm experiencing this crash too. It's part and parcel of investing. I'm not flinching, to be honest. I honestly couldn't care less. It's not something I worry about at all, because as long as you're not investing money that you need in the short term, or you're not investing in individual stocks and treating it like a global fund, what I mean by that is investing into individual stocks and thinking individual stocks always recover too. When people say the global stock market has historically always recovered, that definitely does not apply to individual stocks. After this dip, crash, whatever it turns out to be, some individual stocks will go down and never return to their all-time highs. That's completely possible. Whilst on the other hand, when talking about global funds, whilst it is technically possible it may never reach its all-time highs again, it is very, very unlikely. And the longer you're invested into a global fund, the likelier it is that it is going to recover. So my point is, the reason why I'm not worried is because I'm a long-term minded investor, I'm sufficiently diversified. So because of those two things put together, I don't see any reason to panic. And then lastly, I just wanted to show my aggregated portfolio using Getquin. So this is pretty accurate, not completely accurate, because for ETFs and individual stocks, this is live prices, but for some reason, for JP Morgan Global Growth and Income, it doesn't work perfectly. And the price for JGGI only updates once per week. So you can see here it's 10,800, but actually the live price for my JGGI is 9,900. So you can knock off another £900 from my aggregated portfolio to get the actual value. So let's say I'm on 47,700, 47,600, around that. But you can see over the past month, my aggregated portfolio, including all my ISAs and SIPs, I'm down 11%, £6,000. So there is a lot of pain in the stock market, and it's completely normal to feel uncomfortable about these massive red numbers. But there's a difference between being uncomfortable and then actually taking action on that discomfort and then doing something you regret. So whilst I can't tell you what to do with your money, I'd just say be careful before making any rash decisions. Try not to act out of emotion. Think rationally, think about your time horizon, think about your risk tolerance, and just take all things into consideration. And remember what I said about reinvestment risk. If you are going to exit the market, think about how are you going to know when to get back in. We are approaching the end of the tax year, so I hope to see you tomorrow in my stocks and shares ISA comparison video, the annual video I do on comparing platforms, and share my spreadsheet that also allows you to do your research yourself. I hope to see you there, but as always, thank you for watching and let me know your thoughts in the comments below.